Mike at You Go Home Financial here. This week I'm going to talk about credit inquiries. I get asked all the time, will a credit inquiry hurt my credit score? And the answer isn't as simple as we'd always like it to be, but the answer is yes and no. It might not affect your credit score at all. Sometimes it can take it down 3, 5, sometimes up to 10 points, but it all depends on a number of factors. If you have a very clean credit report, sometimes it may not affect it very much. And other times, yeah, it might drop by 10 points or so. And the good thing is that it's temporary. It's going to go back up, and it should go back up pretty quickly after the inquiry. It makes a difference if you have a lot of credit inquiries going on. So if you're out there shopping around for different things or getting credit cards, if you recently got a new car and a new credit card, and you picked up a Kohl's card and a Home Depot card, and all of those types of increase really start to affect your credit score after a while. And for each additional inquiry you do, the amount of drop that you see increases. So you want to be careful there, especially with if you really are planning to purchase a home or refinance. You really want to only be doing those credit inquiries that are necessary. Life happens. Your lease is up for your car and you need to get a new car or something. It's fine. Just try not to do too many inquiries before you buy a home. So the difference with a mortgage inquiry, though, is they use a different algorithm than they do for things like credit cards and car loans. So they weigh certain factors over others. And so with a credit inquiry, we actually see a different score most of the time than you would see on something like Credit Karma, or if your credit card shows you your FICO score or something like that. Those are good things to help you monitor if something is helping or hurting your credit score. They don't necessarily tell you where you are specifically for mortgages. And the reason for that is a lending company, for a mortgage lending company, they're lending $100,000, $200,000, $300,000, wherever the mortgage loan amount is. We're talking about hundreds of thousands of dollars. They want to make sure that if you're going to borrow that money from them, you're going to be able to repay it. And so they're not looking at necessarily the small things on the credit report. They're looking at the bigger things. They're weighing things. More importantly, a big car loan's gonna affect what your score is more than a credit card with a $500 limit on it. So just make sure when we're going to do that mortgage inquiry, just pay attention to the number of things that can affect those scores. And the reason, I'll go over those in just a second, but the reason you want to do these things is to make sure that by the time you're ready to buy or refinance, that your score is in a good place. So if you're looking to buy, it's January 2021 right now. We're in Michigan and it's cold out. People have kids in school. If you don't want to buy right now, you're not alone. There's a lot of people not looking to move right now, but there are a lot of people looking to move in the spring and summer. So now is actually the perfect time to get started. Because you don't want to get to the moment when you're ready to buy a house, have your credit pulled, and then find out that you should have started working on something at the beginning of the year. So I'm not a credit repair specialist, but I look at credit reports on a daily basis. And there's certain things that come up on credit reports that people are surprised by all the time. Who knows? Maybe you have a collection account that you didn't know about. Maybe you have your credit card company reported a 30-day late payment and you actually weren't late. These are things that you can take care of in advance. Another very, very common one is just your credit utilization. So when you have a credit card, you want to keep your utilization below 30%. Simply put, that means, say you have a credit card with a $1,000 balance, a $1,000 credit limit, you want to keep the balance below $300. or say your credit limit is $10,000. You want to keep what you borrow on that specific card $3,000 or below to keep yourself under that 30%. You would think that if you make your payments on time that you'd have a good credit score, but that isn't necessarily true. Unfortunately, it should be that way. It's common sense, but it doesn't work that way. When you get over 30%, it actually starts to bring your credit score down. So you want to make sure, yes, stay under that 30% mark. Other determining factors, collection accounts are huge. I guess, the way that I usually explain credit to people is it's kind of like a diet. You can do the right thing for months and months, even years, and ruin it all in one fun weekend. So you want to make sure, definitely no late payments ever. And then just being diligent and just making sure, staying on top of it, and making sure that there aren't things being reported that shouldn't be. So now's the time. Now's a great time to, if you're looking to buy this spring or summer, to get involved and check out your credit report. The other thing is, what we look at on a credit report is the scores. First of all, the scores are going to put you in a category of what loan product you're going to qualify for. The next thing that we look at is your debts, your monthly debt obligations that show up on your credit card, on your credit report. And those are things like credit cards, car loans, if you currently have a mortgage, any type of bill that's reporting to the credit bureaus. We look at your monthly debt obligation up against your income, your monthly income, and that gives us what we call the debt to income ratio. The debt to income ratio tells us what dollar amount you can qualify to purchase a home. So now's a good time to start looking at that type of stuff. And if you have any questions about it ever, give me a call, shoot me a text, send me an email. I'm here to help. This is what I do. So, and it doesn't cost you anything to get things started and get in a good place for when you're ready to buy. So that's everything for today. Have a great week, and I will talk to you guys again soon. Thanks.